Hello, my name is Steve Bigelow with the Candlestick Forum. The market is in a basing period. I hate to use the word transition period, but as we can see, we had a nice reversal signal in the Dow in the oversold area. However, we don't have any conclusive change of direction of the market until the Dow can close up above the T line. That remains the final criteria. Same scenario here on the NASDAQ. It traded positive today, but eventually closed back below the T line. Even though this looks like a good, strong, bullish Harami gap up in the oversold area, the probability factor of the T line says as long as you close below the T line, assume the downtrend remains in progress. So it'll be important to see how they open the markets tomorrow. Now, this is also illustrating how the use of candlestick signals or the lack of candlestick signals allows an investor that if they are short to not be, I want to say, scared out of their position based upon bullish trading and then bullish trading up above the T line until the end of the day. Whereas we can see on Etsy, it closed back below the T line. And the other qualifying factor was this is not a reversal signal. This is just considered an update during a downtrend. Now here's the conundrum. Had it closed at this level on Friday, that now becomes a bullish Harami, which has much more probabilities of heading higher. But the fact that this is not a signal, remember, the Japanese rice traders have had 400 years of analyzing and evaluating what the reversal signals look like. Well, if this was something relevant, we would be looking at it today as a signal, and it's not. That should give you a little bit more indication that that is not a strong reversal. You could stay short, and in this case, as we saw in Etsy, it came back down and closed below the T line. NVIDIA, on the other hand, did a gap up, but look where it closed. This is where you use the doji rule. Notice the doji type day closing right at the T line. It makes this very important. Remember, the doji rule is that they're going to move the price in the direction of how they open after a doji. If we wake up tomorrow and things are trading lower, it tells us we're still in a downtrend. If you were short or thinking of going long, if the market indexes show everything's opening positive, you cover your short position and or you can start buying NVIDIA. Now, this is what we're looking for. If there's a market reversal, we want to find the best possible high probability trades. The rhetorical question always is, well, if the market's reversing and there's lots of good reversal signals, how do you pick out the ones you want to go after? And the answer to that is candlestick analysis provides indications or signals that allow you to get a much higher probability that a reversal has occurred. The inverted hammer is one of the 12 major signals. If it confirms the next day, like it did today, the probabilities of an uptrend are 95% or greater that your uptrend is in progress. Now, you add the fact that you had an inverted hammer, gap up, confirmation, closing above the T line, that pretty much makes at least this area your next likely target. You can use that same analysis on MGNX, an inverted hammer in the oversold area, gap up, close above the T line. You could be buying this one on positive trading with a high degree of probabilities. And the scoop pattern, our recommendation today on Relay was based upon kind of a flat handle, and there's your scoop. And we had buy signals, a left-right combo, a hammer signal, a left-right combo, a close above the T line. You can see the scoop, and what do we expect coming out of a scoop pattern? A strong slingshot effect to the upside. So that allows us to find charts like Denelli that's doing the same thing. There's a lot of stocks that could be heading up. What we're trying to do is find the ones that have the highest probabilities of heading up and have the strongest magnitude price move in that move. And the kicker signal is your strongest individual candlestick signal. See a kicker signal, in this case, not only did they gap it up above the previous day's open and go the opposite direction, they closed above the T line, the 50 and the 34, giving us a wave 1, wave 2, wave 3 prospect. So tomorrow you can make your decisions fairly easily based upon how the pre-market futures are showing the NASDAQ and the Dow are opening. If they open positive, more than likely they're going to take the Dow up to the T line. And if they open positive after this gap up, that's a pretty good indication that the T line is not going to act as resistance anymore. The uptrend's in progress. You might want to join us this Saturday. We are going to be doing a full day training on day trading pattern setups and what to do with those day trades once they're established, on how long do you stay in and when do you take profits. This all becomes much more clear when you know what's happening after a pattern confirmation, and using the 10-minute chart to tell you how long to stay into a profitable trade on a daily basis. That'll be it. We'll see you in the chat rooms.